Hello viewers, welcome to my channel. I'm Hashim Ali Khan here. After completing the different subjects, now I'm going to start the new topic, new subject, Financial Accounting 1. In this Financial Accounting 1, I'm planning to cover up the topics, the basics of accounting, journal entries, ledger, trial balance, subsidiary books, bank reconciliation statement, rectification of errors, and depreciation, finally final accounts of a sole trader. These are the topics I'm planning to cover up in this subject called Financial Accounting 1. So if you are new to my channel, I have uploaded the videos on different subjects: financial accounting, advanced accounting, corporate accounting, cost accounting, then business statistics, financial management, investment management. So many videos I've uploaded. Please visit the playlist of my channel. You can find out different subjects, select your subject, concerned subject, watch the video till the end. Definitely you'll get a lot of knowledge, a lot of confidence in your field of study. So now, because I'm getting many comments, many requests from the students to start this basic subject, that is Financial Accounting 1. So I have decided to start this subject now. First, I'm going to start the topic of Bank Reconciliation Statement, BRS, commonly known as. So in this video, I'm going to explain you the complete theory of BRS. So my suggestion to the viewers, to my regular students, don't skip the video in between. Watch with full concentration, with full focus. If you understand the concept, the introduction part, definitely you will enjoy while watching the problems. You can easily get the command, will get the grasp on this topic of BRS. Otherwise, if you leave this theoretical part and try to understand the problems, it will be highly difficult for you to understand. So my suggestion, watch the video till the end, don't skip, with full concentration, with full focus. Try to understand. Now I'm going to start without wasting the time. BRS, Bank Reconciliation Statement. A businessman will open a current account with a bank to make the bank transactions, because nowadays many transactions are conducted through bank. Cash will be received through bank, payments will be made through bank. So every businessman will open an account, that is current account. Every businessman will open an account, that is current account. So when a current account is opened, the banker will open an account in his book, in a ledger. In the ledger, he will open an account, bank account, or sometimes, or many times, the businessman will open a separate column in the cash book. In cash book, he will open a column, bank account column, cash column, bank column. In this case, no need to open a ledger account, bank account, because in cash book itself, he is opening a bank account, bank column. Now, whenever he deposits the money in the bank, he will debit the bank account. When he makes the payment through his bank account, he will credit the bank account. So the businessman will record the transactions with the bank in his cash book. He will debit the bank account when he deposits. He will credit the bank account when he withdraws the money. Similarly, when he opens an account with the bank will give a book called passbook to the customer. This passbook will contain all the transactions conducted between the customer and the banker during a period of time. So all the transactions are recorded in the passbook. Actually, passbook is the property of the banker. It is not the ownership, it is not owned by the customer. It's the copy given by the banker to the customer. So all the transactions were written by the banker. So normally what will happen, when the banker receives the cash, the banker will credit the passbook. When the banker makes the payment on behalf of customer, the banker will debit the passbook. So when withdrawals, the banker will debit the passbook. When deposits are made, the banker will credit the passbook. These are the basic things you have to understand, right? Now, sometimes the banker will not give the passbook, the banker will give the statement. The banker will issue the statement, bank statement. So bank statement or passbook, the purpose is same. Both will contain all the transactions of the customer during a particular period of time. That's all. Now, there are two types of balances called favorable balance and unfavorable balance. Favorable balance will arise when the deposits are more than withdrawals. If the customer's deposits are more than withdrawals, his balance is said to be favorable. When his balance is favorable, his cash book shows debit balance and passbook shows credit balance. When he is having a favorable balance. Deposits more, withdrawals less. Similarly, when his withdrawals are more than deposits, it is called overdraft or unfavorable balance. The customer has overdrawn from his banker. That is called overdraft, unfavorable balance. So in unfavorable balance, his cash book will show credit balance and passbook will show debit balance. So these are the two balances, two types of balances we may have in the cash book and passbook. Now, whenever a transaction takes place between the customer, whenever a transaction takes place with bank, then it will be recorded in the cash book and it will be recorded in the passbook. Suppose if I issue a check to Mr. X for rupees 10,000, I will record that check is issued to 10,000. I will credit my cash book. I will credit my cash book. In cash book credit side, I will write check issued to Mr. X credit side because I have issued the check. The banker will debit the passbook when the check is presented to bank. So whatever transactions are taking place, I am a businessman. So I am an account holder, customer of bank. I will record in the cash book. The banker will record in the passbook. So normally what will happen, the transactions found in the cash book and the transactions found in the passbook will be same. Because I am writing the transaction in my cash book, the banker is writing the transaction in the passbook. So normally what should happen, ideally what should happen, the balance as per cash book and the balance as per passbook must be same. When I open the cash book, it may show that 10,000 rupees bank balance I am having. When I open the passbook may show that I am having a balance of 10,000. So both the books may have the same balance. But in real practice, this will seldom happen. This may not happen. Because sometimes when you open the cash book, it is showing 10,000. When you open the passbook, it is showing 9,000. There is a difference of 1,000. Now the question may arise, why there is a difference of 1,000 rupees between the cash book and the passbook? Why there is a difference? Is our cash book wrong or our passbook wrong? No, both are correct. Cash book 10,000 correct, passbook 9,000 correct. Because there may be some transaction which is found only in one book, not in the other book. On account of that, the balances may show different balance. Now, this is a brief introduction of cash book, bank account and passbook. Now, I am coming to the main topic, BRS. The Bank Reconciliation Statement. It is a statement which is prepared to find the difference between the bank balance as per cash book and bank balance as per passbook. So periodically a statement will be prepared by the customer to find out the reason for the difference between the bank balance as per cash book and bank balance as per passbook. To find out that, we are making bank reconciliation statement. Remember, this statement will be prepared by the customer, by the businessman, not by the banker. It is our purpose. We want to find out. I am the businessman. I want to find out why there is a difference. To find out the arithmetical accuracy of my accounts and any errors are there in the passbook. To find out that, I am preparing the BRS. That is bank reconciliation statement. I have given the meaning. Now, what are the causes? What may be the causes for the difference between the bank balance as per cash book and bank balance as per passbook? There are innumerable causes. Many reasons are there. But we are discussing here few important and common causes which are normally found. Due to these causes, the bank balance as per cash book and bank balance as per passbook may be different. So concentrate now. If you concentrate, definitely you can easily understand the problem. What are the causes? Now I am explaining you one by one causes for the difference between cash book balance and passbook balance. First one, checks issued but not presented for payment. checks issued but not presented for payment. See, this is the first common cause for the difference between cash book balance and passbook balance. When we issue the check, we record it in our cash book. So cash book balance will come down. Earlier, suppose 50,000 rupees is our cash book bank balance. Cash book bank balance 50,000 rupees are there. Now we have issued a check for 10,000. Now our cash book balance has come down to 40,000. But the check which we have given to the customer, to a person, that person has not presented that check to the banker. The banker has not recorded in the passbook. When the customer comes to the bank, deposits the check, the banker will debit the passbook. Till that time, our cash book balance has been reduced because we have issued the check. As soon as we issue the check, we have recorded in the cash book. But the check is not presented for payment. That means the banker has not debited the account. In that case, the transaction is found only in the cash book, not in the passbook. This is one of the cause of difference between the bank balance as per cash book and bank balance as per passbook. Second one, checks deposited but not yet collected by the bank. Checks deposited but not yet collected by the bank. Customers will deposit the check with us. Suppose Mr. X has to pay 10,000 rupees to me. He has given me a check. I have received the check. When I receive the check, I will debit in my bank account. In my bank account debit side, I will write on check received from X 10,000. My bank balance will increase. My bank balance will increase in the cash book. But when I deposit the check in the banker will not immediately credit the account. The banker will take some time to collect the amount from that person. It may take some time. So till that time, the transaction was found in the cash book, but the transaction is not appearing in the passbook because banker has not yet credited. The banker will take some time to credit it. So this is called check deposited but not collected by the bank. This is the second case. Third cause may be interest on investment, dividend, interest on deposit, etc. credited in passbook but not entered in the cash book. Sometimes the customer may receive interest on investment, dividend from companies, etc. So the customer will ask the companies to deposit the amount in my account, in my bank account. For example, I am the customer. I am having some investment with some companies. So I instructed the companies to give the dividend or interest directly in my bank account. Don't send it at my address. This is my bank account number, and deposit this amount in my bank account. I have instructed to the company. The company will directly deposit the amount in my account. So automatically my bank account balance will increase in the passbook. But I will record in the cash book only when I get the information. Till the time, if I didn't get the information, my cash book balance is showing a low balance, passbook is showing a high balance, because the banker has collected interest on investment, dividend, etc. and credited my passbook. Similarly, interest on deposits. When I deposit the amount in the banker will give the interest. The banker will not inform me that I am crediting your account with so and so interest. Simply the banker will record it in my credit side of the passbook. So in that case, what will happen? My passbook balance will increase. Whereas I didn't have the information, I am not recording in the cash book. So cash book balance is showing low balance. So these are the cases where the difference may arise between cash book balance and passbook balance. Next comes bank charges, interest on overdraft, insurance premium, etc. debited in the passbook but not entered in the cash book. Just like the incomes, some expenses are also there. Suppose periodically I have to pay insurance premium. Periodically bank charges will be debited in the passbook. Suppose if I have given standing instruction to the bank that every 3 months you pay so and so amount as insurance premium from my account to the insurance company. Similarly, I have instructed the banker to make so and so payments every month or every 3 months. Like that, I have instructed the banker. The banker will make the payments. Similarly, Interest on overdraft. When I have taken overdraft from the banker will charge interest on my overdraft. The banker will debit my account. So when the banker has debited my passbook, the passbook balance will decrease. But I don't have the information, I have not compared it, so my cash book balance are not recorded in the cash book, so cash book balance will not decreased. Cash book balance still showing more balance, passbook showing less balance, because the banker has debited with the payments made with interest on overdraft, etc. This may be one of the reasons why there is a difference between bank balance as per cash book and bank balance as per passbook. The next is amount directly deposited by customer of the trader in the bank. Sometimes the customer, the account holder, I am the account holder, I have instructed my customers to directly deposit the amount due to me in my bank account. I will instruct my customers, don't pay me cash. My bank account, my bank is so and so, my bank account number is so and so, you deposit the amount in my bank account. I have given the instruction to my customers. The customers have directly deposited the money in my bank account. I don't have the information. What will happen? The passbook balance will increase because customers have directly deposited the money in the bank without my information. My cash book balance is showing less balance. That may be one of the reasons why there is difference between cash book and bank. Then checks deposited but not entered in cash book. Checks deposited but not entered in cash book. Sometimes what will happen? A check is received from the customer. Our responsibility is, first of all, we should record the check received in my cash book. In my cash book, I have to record it. I forgot to record. I forgot to record the check received in the cash book. I have sent the check to the bank for collection. The banker has collected. Passbook balance has increased, but cash book balance has not increased because I forgot to record in the cash book. That may be the reason why there is a difference between cash book and passbook balance. Then check debited in cash book but omitted to be sent to bank. This may also arise. Sometimes a check is received and I have recorded in the cash book, but I forgot. I forgot to send this check to the banker for collection. That means the check is recorded in the cash book but not found in the passbook because it was not sent to bank for collection. That may be the reason. Next one, errors in cash book and passbook. After all, the cash book and passbook are maintained by human beings or by machines. There may be a possibility of error by human being or by machine. So due to some errors like overcasting or undercasting or writing twice, a transaction conducted once but we have recorded twice in the cash book, while we have committed a mistake while taking the totals. These are the errors which may be there between the cash book or it may be there in the passbook. Due to these errors, there may be the difference. So these are some of the causes. Don't think that these are the only causes. These are only the examples I have given, most commonly found reason why there is a difference between cash book balance and passbook balance. Now, important points to be noted while preparing BRS. The important points we have to remember while making the BRS is, first one, BRS is prepared as on a particular date, not for a period, just like balance sheet. When we make the balance sheet, it will be prepared as at a particular moment, particular day, not for the period. Similarly, BRS does not prepare for a period, it is prepared as on a particular date. Secondly, it's a statement, not an account. The bank reconciliation statement is a statement only. It is not an account having debit or credit. We will not apply the rules of debit and credit in BRS. It's only a statement to reconcile the bank balance and the cash balance. Bank balance means favorable balance. Just now I told you in the beginning of this video, there are two types of balances, favorable, unfavorable. Favorable balance means when deposits are more than withdrawals. Unfavorable balance or overdraft means when withdrawals are more than deposits. So if nothing is mentioned, only bank balance is given, in that case we assume it is a favorable balance. It's a favorable balance. When it is a favorable balance, the cash book shows debit balance and passbook shows credit balance, until and unless it is given as unfavorable. Now, next one, in the problem either cash book balance or passbook balance will be given. When we solve, when we are making the bank reconciliation statement, one of the balance will be given in the problem. Either cash book balance may be given or passbook balance may be given. That will take it as a starting point. We'll take the starting point, the balance as per cash book or balance as per passbook, whichever is given in the problem. Whichever is given in the problem. Sometimes both the balances are given. That means we have to prove whether both the balances are correct or not. So if cash book balance is given, then cash book balance is a starting point and we have to find out the passbook balance. If cash book balance is given, we'll take cash book balance as a starting point. We make some additions, we make some deductions to find out the balance as per passbook. If passbook balance is given, then passbook balance is a starting point. Then we make some additions and deductions to find out the balance as per cash book. तो पासबुक दे दिया तो कैश बुक मालूम करेंगे, कैश बुक दे दिया तो पासबुक मालूम करेंगे after some making additions and deductions. When extracts of cash book and passbook are given, then we have to compare the transaction. Sometimes in the problem the extracts of cash book and extracts of passbook are given. Then we compare both the extracts. If the transactions are found in both the books, ignore the transaction. If a transaction is appearing either in cash book or in passbook, those transactions we consider for preparing the BRS. That's all. So this is the theoretical part of the term BRS. So I suggest my viewers to go once or twice this video to get the command, to get understanding of this basic introduction of this theory of BRS. Then we'll start the problem. In the next video, I'm going to start the problem. If you are satisfied with my video, please give a like to the video. Give your valuable comments and share it in your group, in your friend circle, so that more students can get the advantage from this video. So next video, I'm starting the problems on bank reconciliation statement.